probably have no reason to go against what has existed for a long time, which is the ratio between Bitcoin and Ethereum. It used to be almost exactly 10 to 1. So if Bitcoin was 20,000, Ethereum would be 1,000. No, it was 10 to 1, 20,000 and 2,000. And that changed a little bit in the last cycle. So now we're 1.8. So, Bitcoin won the race to be money, right? It is the perfect money. It's digital gold. I do think that Ethereum has the potential to be the world computer, right? This giant networked computer, which everyone else builds stuff on.
Welcome back to another enlightening update on the Bitcoin landscape. The cryptocurrency market has fluctuated a lot in the last several days, especially with regard to Bitcoin ETFs. The spot Bitcoin ETFs saw a sharp decline in inflows, hitting a 2-year low on Wednesday, February 21st, according to reports and statistics from several crypto analytics organizations. We'll get into the details of this market action in today's video, where we'll examine the performance of the top 10 ETFs that only brought in 500 Bitcoin, or a net of $25.5 million. This amount is the lowest since February 6th, when the fund had withdrawals of almost $100 million over the course of the preceding 5 trading days. Notably, withdrawals of GBTC contributed significantly to the steep decline, losing around 2,652 Bitcoin, although the total amount acquired by BlackRock's iBit and Fidelity's FBT was only a few coins short of 3,000 Bitcoin, but things appear to be shifting. There has been a stunning comeback as of February 22nd, when ETFs had inflows of $251 million, bringing net inflows to $5.3 billion overall. This comeback is evidence of these ETFs' ongoing ability to draw in cash from fresh institutional investors. However, what does this imply for Bitcoin's and other cryptocurrencies' futures? Mark Yusko, a well-known hedge fund manager, is more optimistic than ever about Bitcoin and the cryptocurrency industry through 2024 and beyond. Yusko recently discussed his thoughts on the current bull market in an interview with Altcoin Daily, particularly in light of the impending 2024 halving event. Yusko predicts that this will greatly increase the effect that ETFs have on Bitcoin pricing. Follow along as we share snippets from this insightful conversation with Mark Yusko. Don't forget to subscribe to the channel and like this video for more information on the most recent happenings in the cryptocurrency industry.
Look, we're in crypto summer, and crypto summer is a period where we're going to drift slowly, series of higher highs and higher lows. So not without volatility, we're going to drift slowly toward fair value. Well, why is that? Well, after crypto winter, okay, and you bottom, you get crypto spring, where you just kind of bounce around the bottom and it's kind of yuck and not a lot happens. Well, then crypto summer happens where the investors come back, right? They've gotten over losing money and they come back and they're like, hey, wait, if the fair value is 52K, and I was rounding and said it's 50, but according to Tim Peterson's Metcalfe's law model, the fair value is 52. So we were at in the 30s. We're going to drift toward that 52 number by the halving. But the caveat I said is if, and I might have said when they crown the king, that BlackRock was going to get crowned. Now, I didn't think they'd do all 9. I actually didn't. But that's even better because that's more demand. And so as we've come closer to fair value, now we've totally completed that segment of the move. Well, now we focus on the next thing, which is the aggregate supply shift. So the halving, now it's scheduled for like April 8th. Originally it was early May, and then it was, for a few days it was 420 and everybody was freaking out. And now it looks like it's the 8th, which I think is ironic in that that's the solar eclipse date. So I think that's kind of a wild coincidence. Not planned, I don't think. But anyway, so when we have the fair value doubles. Well, no, that's not how it works. I'm like, well, no, that's exactly how it works. Because if you cut the block rewards in half of the miners would go out of business because their costs are fixed. So the price in historical halvings has doubled. Not immediately, but over time. Now, I don't know if we talked about this or not, but I've kind of changed my thinking on that because of ordinals, because of inscriptions, and because of transaction fees, maybe we don't double this time. Maybe we only go up 50% because we don't have to have all of the money come from block rewards. So let's say we get to 75 as fair value. And again, the model will tell us what that fair value is, but let's call it 75. Then what happens is we'll get to crypto fall, which is the June period post the halving. That's when the craziness starts to happen. That's when the FOMO happens. Then we get into Thanksgiving and everybody goes home and everybody's patting them on the back and come on in, you get 2 turkey legs this year. Whereas 2 years ago, you're not invited anymore. You're disinvited if you're a crypto person. So now we're going to get that FOMO top. And in the past, that's gone to 2.3 times fair value. So when fair value was 30,000 in the last cycle, we got to 68, 69. This time, let's say we only get 2 times because there's not as much leverage this time because they cracked down on Binance and others. So let's say we get 2 times, that would be 150. I think that's baked in the cake.
Along with his optimistic perspective, Mark Yusko has made a big prediction. He believes that this year will see more fiat dollars converted into Bitcoin and other cryptocurrencies than there have been in the previous 15 years since the cryptocurrency's founding. Given the cumulative impact of the enormous bull runs in cryptocurrency, this claim is rather important. The founder of Morgan Creek Capital believes that the epic blockchain age will begin around 2024. These days, traditional finance's trust structure is progressively giving way to the blockchain's truth system. So far, institutional investors have contributed more than $11 billion to the ETFs, but according to Yusko, this amount will continue to rise until it hits a staggering $300 billion. In an engaging interview with Altcoin Daily Channel, Yusko discusses how blockchain technology is developing and offers his price forecasts for Ethereum and other Layer 1 tokens that he believes have great potential. As the bull market continues, these additional segments from the interview offer further insights from Yusko. Let's hear his viewpoints on how the Bitcoin scene is changing.
I can make the case that Bitcoin won the race to be money, right? It is the perfect money. It's digital gold. And I know there are people on the East side that say, no, we're money too. I'm like, not really. And I don't think you can be money using proof of stake, but that's just my own personal opinion. So I do think that Ethereum has the potential to be the world computer, right? This giant networked computer, which everyone else builds stuff on. Now you got to fix gas fees, and they're working on that. And so I probably have no reason to go against what has existed for a long time, which is the ratio between Bitcoin and Ethereum. It used to be almost exactly 10 to 1. So if Bitcoin was 20,000, Ethereum would be 1,000. No, it was 10 to 1, 20,000 and 2,000. And that changed a little bit in the last cycle. So now we're 1.8. So that's a little bit higher. So in that regard, I could see a bigger rally in Ethereum than Bitcoin. And that's kind of what you would expect in the pump part, in the final meteoric parabolic move. Ethereum has historically outperformed Bitcoin, and it probably should again. So let's say Bitcoin gets to 150, like I think it will. And let's say we don't go all the way back to 10 to 1, but we go to, we're at 1.8 now. Let's say we get down to 1.5. That's probably not aggressive enough, but let's say it's 1.5. So that's 10,000. I think there are a lot of people that have that number in their brain and a lot of people say, well, that's not enough. Like, fine. Let's say it gets all the way back to 10 to 1. Then that'd be 15,000. So comfortably somewhere between 10 and 15. I'm still not 100% convinced. So come at me, Solana guys. I'm not 100% convinced that you fix everything. And I do worry that if one person can turn off the network temporarily, that's not really decentralized, is it? I mean, that's a concern. Now, it doesn't mean I hate it, and it doesn't mean, I haven't sold the rest. I told people very bluntly, it was our best investment ever, and we sold most of it, but we still owned about 20%. Haven't sold that. Just like Coinbase, we didn't sell all of it, and I'm really happy because today they busted earnings wide open. So I think L1s, so to answer your question, L1s for sure. Now, I say that because I like what they're doing at Avalanche. And I love John Woo. He's a buddy, and I think Gun's a genius, and I like that. And I think there's some interesting things going on at Cosmos. And the second thing is real world assets, tokenizing real world assets. Absolutely. And how hilarious. And I tweeted this out, and I don't really believe he did this. I don't think he actually saw my video, but Larry Fink has been on TV multiple times now talking about every stock, every bond, every currency, every commodity, it's all gonna be tokenized. But I've been saying that for a long time. I've been saying that since 2017, and I believe it. Now, there've been lots of reasons why it hasn't happened yet, and we still have lots of problems. Like if I take a piece of land and I quote unquote put it on the blockchain, the land is still where I left it, and I still have to have somebody observe it, or maybe I have to put sensors around it to make sure that it didn't get flooded, or if there was a building on it, that the building didn't fall down. But in terms of solid provenance and ownership and title, blockchain's way better.
Using Bitcoin's qualities as the ideal digital gold, Mark Yusko makes a strong argument for why it should be considered the ultimate form of money. He rejects the assertions made by other cryptocurrencies, especially those that use proof of stake, that they are not legitimate forms of currency. Yusko, though, believes Ethereum has distinct possibilities. He sees it becoming into the largest network system in the world, the foundation for future development. He acknowledges the problems with Ethereum's gas fees, but points out that attempts are still being made to fix them. He notes that historically, Ethereum has done better than Bitcoin throughout the last great parabolic surges in the market. Yusko makes projections about possible price increases for Ethereum. He believes Ethereum would easily range between $10,000 and $15,000 if Bitcoin reaches $150,000 and the Bitcoin to Ethereum ratio corrects to 1.5. Although he accepts the historical 10-to-1 ratio, he is nevertheless open to other options. Yusko raises doubts about the potential of Layer 1 tokens, L1S, and raises issues with decentralization in the process. He challenges the real decentralization of networks that may be momentarily shut down by a single party, notably bringing up Solana. Despite selling most of their investment in certain tokens, such as Coinbase and Solana, Yusko remains cautiously optimistic about L1S. He emphasizes the potential of projects like Avalanche, led by John Woo, and Cosmos. Real-world asset tokenization is another area that Yusko finds promising. He mentions Larry Fink's recent discussions about tokenizing every asset, echoing Yusko's beliefs since 2017. However, he acknowledges current challenges, emphasizing the need for continued improvements in blockchain technology to address issues like provenance and ownership in the real world. Until next time, don't forget to like and subscribe for more videos like this.